8/3/2012, 5:41 a.m. Pacific Standard Time. We just had the monthly jobs report come out, and I would like to show you the super gap in these names in the price volatility. Not to mention what happened with Knight Capital during the week and what high frequency trading can do in futures pre-market as well before the opening bell. But once again, we got Priceline on a super gap, Google on an $8 gap. We've got Blue Nile that reported their earnings, got Apple with a small gap here. So these are the gap open up players within their volatility. Stocks will go up and hit their resistance levels within this jobs data. How do I take that monthly unemployment report and where will stocks hit the wall of resistance and then have to pull back for that short trade? And then when they do hit their support level, then you'll have to get net long. On the gap open up down list today, we only have a few in here. ZIP, these are earnings related. And earnings are well more than 3/4 out of the way. Now, let me tell you about the jobs number and what the super gap. It gives Ben Bernanke all the reason more not to give QE3. Once again, Nasdaq pre-market futures. These are going to be the setups at resistance levels. And here's Google setting it very nicely. That's why we know that we were due for revised numbers on this. And the Dow futures are up 129. Nasdaq futures up 35 plus. Okay, and we trade Nasdaq index futures as well. However, on the opening bell, we'll be trading the Nasdaq 100, and we're going to go up. We're going to hit the wall of resistance from the headline news. And within the high frequency trading model, we're going to see if a sell script, meaning that the good news is a sell script and the bad news is a buy script. It's something that we have been seeing. We'll be doing specials on our site that you can learn more about what Knight Capital did, how that program cost them over $400 million in their high-frequency trading technologies, which is a disadvantage to the mom and and pop traders, and the confidence that people have today in markets have changed significantly. Nonetheless, it's a Jobs Friday. It's a super gap to resistance levels. Trading ranges will be in there. Now, when we do our special on Knight Capital and high frequency algorithms, how they can run Renegade, how that company was worth $1 billion and now it was worth $300 million. They're going to have to get financing. Everyone is going to be chewing over this gap. It is a Friday. It is a weekly options expiration. They will be selling the calls on the opening bell because the calls will get inflated. And the calls, we own some of these calls over here, like the 630 that was marked down on Google. And we had some calls with some players on the 625 because it had gotten marked all the way down as the puts the other day got marked up. And we made a nice trade with that. So once again, I'm going to conclude the Nasdaq comp relative to the jobs release pre-market futures. Here are the equities over the counter that are gap and super gaps. Priceline back up. By the way, they report earnings next week. I think they'll have a problem, but Google, on the other hand, is acting quite well with the gap. And Apple, well, it's come back, but once again, that these are artificial price gaps in pre-market futures that will hit their top line, then they'll have their pullback. So we look for that first side of the trade would be short at resistance, then they pull back to support, and then we get net long and we take our intraday profits and do what we do best, make money.